Good evening, all. Ira Epstein, and here we are with your metal market wrap-up. And this wrap-up is for Tuesday, and we're at the 4th of October, 2022, 5:40 p.m. Central Time. Well, do remember that tomorrow we have the all-important OPEC Plus meeting. The energy minister of Russia is attending. Financial Times is talking about the fact that in looking at it, they think there's obviously a big cut underway right in the face of President Biden in the West. So does this align OPEC Plus with Russia? That is going to be the photo that people are concerned about. I don't know how they get this done, but the fact that Mr. Novak is there tells me that there's a big cut taking place. Let's see what it is. In the metal markets, today was the day that I call for a low-hanging fruit. It was the easy day to get out of gold on the upside. Now, could be too soon, it's hard to tell, but I'll explain it as I get into the charts. Dollar down sharply today, but now you're starting, as the markets are reopening, to say maybe we overdid things a little bit today. That's why the currencies are backing off. Bonds and notes probably right here have run the course, I think, to the upside for the time being. The JOLTS data came out today, and that is the ads wanted to amount of jobs and what goes on, layoffs and who quit, and you get that type of data out of this. And suffice to say, the amount of job offerings is dropping in terms of the ads, but when you look at layoffs and quits and hires, it's pretty stable. I wouldn't call that anything else. So when we look at the gold market, here's the hard money. The easy money just came off. I'll show it to you in a moment. The hard move is from here, if you're going to get to the 18-week moving average of closes. When you look at the run in the market, yesterday you had that outside move, and a lot of people use that saying, hey, if it gets back under that low, fine, but if it doesn't, you're probably going to make a run to the upside. Where's the possibility? Well, if we study moving averages, as long as you're over the 18-day moving average of closes, you're looking for a thrust up. In moving average numbers, one of the numbers is 1778.80. Another's 1839.60. I don't know what would make the market decide to go up $100 an ounce. It can happen. I don't know, it would move instantly if Russia were to use some type of nuclear weapon in Ukraine, right? I mean, things would go bananas. Gold would become worth God knows what because you wouldn't know what to do with paper money. I'm making this up. I don't know. Don't say anything. I'm giving you examples, and that's all that it is. So the most likely number that you see here is going to be the Bollinger Band. But for those of you that are subscribers of mine and work with me, in the morning on my subscriber videos, I show you what another study called window envelopes. I do not, by my design, put everything here. That's what my paid subscribers get to see. And there was, boom, you came to the third flip of a window envelope combined with that. And as you're going to see right now, an overbought market. You take what I call the low-hanging fruit and leave the rest of it out there. If you guys can get your ladders and get the rest of the money, God bless you. Now, before we go on to the next chart, on Thursday at 12:30 p.m. Central Time, I'm going to be holding my live webinar. It's 20 minutes long. I start it right at 12:30, assuming there's no computer glitches with anything. It is a Zoom webinar. I end it at 12:50. Do I go over? I try not to. And I do start on time. I open it at 12:15. Ideally, when you sign up, you get from me the invite. In other words, you sign up, you get the invite with your passcodes and all. Right in the invite, there's a link. Click on it. If you have any questions, that's where you write them. Do me a favor. Don't run into the meeting and think 10 minutes before it gets going, I'll start out writing Ira a bunch of questions and I'll answer them on these different charts, have them prepare them. Give me the courtesy of that. It's a free webinar. You're there. I can tell you it's 2/3 already booked. So how do you get in? Follow me. Take your cursor, just move it up anytime up here. You'll see an icon appear. That's your invite. Just give it a click. Fill out everything you need. Send me the questions you need. Okay. In terms of the gold-silver ratio, boy, silver really fell apart in a major way. And where did it stop? We were looking together that if it rallied, I was looking for the resistance at the 18-week average. It's what happened. Once the market started down, silver really gained on the gold market. Now, silver's over the upper Bollinger Band. You only stay over the band, 5% of the time. But there's another element that happened. If we come and we take a look at today's range size, let's go to that. The range of the day, as we could see, was for the high 2131 to 2068, and you closed 2109. If you divide that, the difference is 63 points, and if you divide it in quadrants, 63 is going to be what? 15 cents? So 15 off the high would have to be the 2116 area. It's my technique for determining was today a breakout. It was not. If I get 2 days in the top quadrant of the day, both over the Bollinger Band, I consider it a breakout. This is not. So I am looking for this market to have serious issues, not bearish, but pullbacks, because you've got 2 days in a row over the upper Bollinger Band. Let's get over here so I can bring you back to it. I expect it to pull back inside. If it wants to reach up, I can't say it won't, then 2217 roughly, the 200-day average is there. But again, I think the pros took a lot of money off the table today. In the copper market, just think with me this. Today is the 4th. On the 16th, the People's Party Congress, the big event in China takes place. Do you think they're going to go into it with copper sinking away? I don't. Do you think they're going to go into it without saying they're going to do something on infrastructure, something to help their housing market, COVID issues, blah, blah? All of the talk, the talking machine's going to get going soon. It's a little too soon right now. It's going to be on the bullish side for the markets because this is a rah-rah event. If everybody comes, they're going to vote in President Xi again. And they'll congratulate him for what a wonderful job he's done in taking their economy down this hard. I'm being facetious, obviously, but I'm not facetious about the fact that they're going to do certain moves in my mind. Let's see if I'm right. In any case, you're back into an uptrend. As long as the market's going to stay here, support, I would expect at 344. I am not keen on telling traders to buy the market because they'd have to have a stop under the last break low where that arrow is, and it's in the neighborhood of 11 cents. At $250 per cent, I got better things to do with a $3,000 risk. I wouldn't do that. Now look at the platinum. How many of you have taken the Enhanced Bollinger Band course on our website? What do you do the first time you get up to a Bollinger Band and you're not embedded? So long. Thank you for the money. Auf Wiedersehen. Palladium, same identical thing. I have been pointing out to you as well that the reason these markets are moving ahead of gold and silver is what? Lack of energy in South Africa to get the miners what they need to produce these numbers. But these are big numbers that China often counts on for its car industry and other metals that it uses throughout everything it does. But you're in an uptrend. You are over the band. You own it. I don't want to own it. Then we get to the dollar index, and this is the zone that I'm now looking for the market to hold. So what we've had is we had a break at the end of September, a huge one where the dollar took off, and I'm talking a break in the stock market, where the dollar took off and the market got ahead of itself. It kept staying over the upper Bollinger Band, and that inevitably ends up in a pullback. Where to? Always hard, but often, what I call the line in the sand. You hear me say it to you over and over, the 18-day average of closes. Markets like to go there and figure out what to do. So that's where I think we're at. We're not in a downtrend. We're in a correction in the market. And really, I don't think much more than that. So I'm going to remind you that we've got our What's Up webinar. You're invited. It's going to fill 1, 2, 3. I only have X amount of seats. I don't buy a bigger license. No need to do it. The people that are coming that were my paid subscribers, they've been sent their invites. If you didn't get an invite from me, it means you're not in my mailing list. Just simply take your cursor, move it up here. You will see an icon come, give it a click, and remember, When you get back, and it'll be very instant after you register, you're going to get an email. Check your spam and everything if you're questioning where it's coming from. It'll have the user ID, everything in there. About an hour before the webinar kicks in, by the way, I've set it up so you're going to get a reminder email as well that it's starting. I start sharply. I'll open around 12:15. I want to see you there. You have yourself a great day. Thanks for watching me. Give me a thumbs up if you like these videos. I'm Ira Epstein.